What's up, traders? This is Richard K from Price Action and Income, and welcome back to another one of my market geometry videos. As you all know, I quite like doing some educational videos on my market geometry techniques using pitchforks, channels, Fibonacci work, etc. But I've decided recently, after quite a few requests from some of my members and some of the comments I've seen down in the comment box on YouTube, that you guys would like to see some sort of market recap and maybe some sort of forecast as to where I see some of the major markets might be moving towards in the near future. Now, this video is actually being recorded live right now, a few hours before the non-farm payroll report comes out in the US. So I do think that this month's report will probably be quite volatile, and meaning that it can affect quite a lot of markets, which is also why I want to be looking at the markets that might be affected the most by them, if I can say that. So, but in any case, I do have some longer term views which might be helpful for you guys. Please remember, this is not trading advice. You do need your own strategy to trade anything, as per always. So like I said before, I'm not really going to go into market geometry work, but just give you a quick recap of what I see the markets are doing, the major ones. All right, so on your chart in front of you, we have the ES mini features and set to a continuous chart. Whether you trade SPY or the mini contracts, or you can trade on your Forex account. This is what I think about the ES at the moment. Something that's absolutely clear to me, at least, there seems to be a lot of people that agree on that, is that whatever happened here on January 2018, price moved lower, it went up, and for that period until March 2020 last year, price found a bottom, and I'm still viewing this as an expanding triangle, which is always very volatile in nature. Those of you that've been following my videos for quite long also know that I consider triangles, especially depending if they're symmetrical, ascending, or in this case an expanding triangle, as how can I say, as terminal in nature. Meaning by that is that they tend to appear, especially if they form over a long period of time, at the end of a directional move, longer term directional moves. Obviously, this is hell of a bullish at the moment. So they tend to be the last corrective pattern on a bigger scale before you see important tops come in. Something really cool that I've noticed the other day is that there were some really cool repetitive time ranges between this low. And it seems that on every 53 bars, and that would be trading days, these would be calendar days. Obviously, there's holidays and stuff in between, so don't worry about the days so much. We're more worried about the bars here. Is that there seems to be a repetitive cycle that happened between corrections. And in this case, we had a low to a high. It took about 53 bars. Not 100% accurate, guys, but it is quite interesting to see this. Then we had a small correction over here. Then we had 56 bars to this one over here, this high, and then we had a correction. Even the correction here had repetitive time dates in between, which would, if you double this up, would be close to actually 56 bars or 57 bars. I can't really remember the exact number there, but very interesting to see. And then from this low to this recent high, it almost gave the high 100%. It made a sort of a double top there on a smaller time scale, 55 bars. Price moved lower again. Now, this move to the upside that happened is obviously a very strong bullish phase, the one that started in March last year. And considering that this massive triangle that took years to develop, or a couple of years to develop, might be showing that this last move is terminal in nature, I'm expecting what we call a blow off top, meaning I do think that the ES can go much higher. Now, whether things correct in between or we get another sharp move lower, whatever it might be, I do think that over the next few months or so, the price can go much higher. Guys, I will in the next video, if you are interested in it, start throwing in some market geometry work there for you, and I'll be happy to share that with you in, let's say, next week's market recap. If this is something that you would like to see, then please drop that down there in the comments and I'll read them. I try to respond as always to you guys, and then see if I can then add an additional market geometry work in here. So this is just my opinion. Obviously, like I said, I do consider this entire bullish move here, which has been massive, to be a blow-off phase, meaning that at some stage, and without trying to sound like a person harboring end of the death sort of scenarios here, that we could get a quite nasty deep correction that might last even a couple of years at some stage. But wherever that stage might be, who knows? And this is why we obviously have a strategy, and you need to exercise patience to try and trade these things. So depending what happens today, we might even just blast off, or we correct some more, whatever the reaction of the markets might be. I do still think that we're in a blow-off phase here, meaning we could still go much higher. Something that's very interesting on the dollar index, if you do trade currencies, the dollar index is something that's really interesting to me. There's been a lot of talk that the dollar is dead, as many would say. As you all know, since last year's high, when was this? In about, the same window, March window, we had the dollar come down pretty strong. Now, this is the dollar index. Obviously, there's a basket of currencies that make up the dollar index, but it is a good indication of the strength of the dollar or the weakness of the dollar. In this case, obviously, the dollar has been pretty weak. A lot of people would obviously always think that, yes, it's been coming down very hard, but they always fail to look what the bigger picture is telling us. So if we look at the bigger picture, then I consider this move, even if it was in 2008 or 2011, this impulse to the upside here, that price might just be correcting. Now, to try to figure out what correction you're dealing with on a long time frame or time period like this is obviously impossible. But we are looking for strong support resistance areas where the dollar, what I am at least with my members, trying to look at an area where the dollar might actually find support. If you take a fib retracement, very easy from this low in, May 2011 to this high in Jan 2017, there was a support coming in at, again in February, March, in 2018 at the 50% retracement level. Price then moved up, failed to break this high, and then came down lower again. Now, if you draw in this case, I will actually show you some of the market geometry work I've been doing. I've been following this one for quite a while now. If I draw a standard pitchfork from that high, first anchor, second anchor, and third anchor over there, then we have quite a similarity in what happened over here. I think might be happening over here. We had a clear 1, 2, 3, 4, 5 waves down. This could be an A, that could be an B, and whatever it might be. If I were to buy the dollar, then I'll probably do it within this sort of region here. You'll see that I've got two vertical lines on my chart here, and I think this is a time window that I expect the dollar index to probably make an important low, meaning that we can get a much higher bounce at the moment. I currently think that this little bit of strength that we've seen in the dollar here is just a correction. I think we only have a 1, 2, 3, fourth wave correction going to the upside now, and then another move lower. And we're looking here about, I don't know, depending, this obviously slopes down, so this price will go lower as time progresses. And by the time, if price gets down here, we could be looking at a different zone. But this is sort of a time zone, anywhere from between April and June, that I would say, if price does move lower, that the dollar could start seeing some stronger support come in, resulting in a much higher correction. So I'm reading this is 1, 2, 3, fourth wave correction with possibly a fifth wave moving down again. Something else that's very interesting on there, another reason why I've got this time window for you guys there, is if we take my date measuring tool from that high to that high. How did I sort that out? It's either that one, yeah. is 168 bars. Obviously, guys, this is a weekly time frame, so it's a massive sort of time frame we're looking at, but it aligns from this low to that low, and this aligns with the center median line of this pitchfork that I drew, stand pitchfork. So a little bit of a far range forecast. Let's see how things go. But in any case, I do think we're dealing with some sort of a fractal that's similar to what happened here at this stage over here. So I'm not viewing this as the end of a low, perhaps a third wave with a correction up and then a move to the downside. This could still go quite high up. If it does break sort of higher than here, then I won't consider this, and we've probably got a low in this as a third wave, and then a low probably ended already. But in any case, I'm seeing some near-term strength in the US dollar. That's obviously evident versus a lot of other cross pairs at the moment. So that's my view on a dollar index. Just be careful. I think we are just correcting upwards. And then gold. Everyone's been thinking gold's going to go to the moon. I've been trying to track what I believe is happening with gold since this important high year on the 6th of August last year. Let me just switch that for you to a daily time frame. Obviously, prior to that, we had this massive strong trend where gold made all-time highs. Previous videos I've shown about gold, if you would like to go and view them, I was sending out warnings that we're actually hitting some pretty strong market arbitrary lines, and it turned out that they were quite accurate and price started moving lower again. Now, those of you know that I do try to apply Elliott wave loosely, especially on higher time frames, because for me they're a bit easier to count or label than actually using on smaller time frames, just to avoid a lot of the noise that you might see on charts. So there's a saying between Elliottians that if you are super confused about what correction you might be dealing with, price doesn't seem to have any sort of clear direction, etc., then you're most probably dealing with either one or two things. They would probably lean towards that you're dealing with some sort of fourth wave corrections, which in the bigger scheme of things can be quite complex in nature, which is definitely what's happening over here. So my opinion is that gold can probably still go higher, but the alternative translation would be that we are forming some sort of leading diagonal that might end quite low from where price is currently. I still think we will take out this low on the 30th of November, maybe even today. We'll have to see what happens during today's non-farm payrolls report, the unemployment figures and so forth. But in any case, this is what I've been working with. This might be some expanding ending diagonal with another wave to the upside. But over the near term, I do think that price can actually still move low. So be careful if you have any longs there. Again, guys, do practice your own due diligence. You need to have a strategy to help you decide where you want to execute trades, etc. The alternative interpretation of this is that this was a 1, 2, 3, 4, 5. Forget now about this expanding leading diagonal or ending diagonal. This could be a leading diagonal as well, which means we might get a reaction and then one hell of a drop down to the upside, meaning that, or downside, sorry, meaning that this high here could have been an incredibly strong high and gold could move lower for the rest of the year. But that being said, the major trend is still bullish. I just think that this multi-month correction might just be a multi-month correction, but without actually thinking about where price might go too much over the next month or year, over the near term, and this is why I'm doing this video, I do think that price could move lower in gold. Alright guys, and that concludes today's video. Hopefully you find these sort of analysis videos useful. Like I mentioned before, I'd like to do them a bit more often. But again guys, this channel is only possible because of you guys. So please hit the like button, subscribe button if you've done so before, the notification bell as well, so you know next time I release another video. But again guys, leave some comments down there. Please try to keep them positive and constructive. We're all trying to make sense of what the market's obviously doing. But if you do want to see more of these videos, and perhaps even if you guys share enough comments that we have similar sort of setups you want me to look at, then I'll be happy to cover that again in the next video. All right, guys, it is Friday here in South Africa, and wherever you guys are in the world, hopefully you're keeping safe, and I hope you have a great and fantastic weekend. Until next time, this is Richard K from Price Action Income. Goodbye.